Hey, I'm Alex. Welcome to Future X Present, where we dive into the real-time market context and build a narrative around what's happening right now. By blending current price action with historical data and technical analysis, we'll shape a clearer picture of our next trade. Whether you're here for key setups, strategies, or just a deeper understanding of today's market moves, this is the place to add more value to your trading. Now here are some daily levels ranging from low to high. 5645, a major level with daily fair value gap busy midpoint. This area has historically shown buying interest. 5658, this is the daily fair value gap busy high, serving as a potential resistance point where sellers may emerge. 5695, lower expected move for 10-4-24. If price approaches this level, it could offer buying opportunities if support holds. 5703 marks the complete filling out of the week's fair value gap. Watch for price reaction here for clues on trend continuation. 5724. This weekly fair value gap midpoint, which has been defended on multiple occasions, adds weight to its significance as support. 5733. The range low. This level is critical for identifying potential short setups if price breaks below. 5755, 63 area. This level represents daily resistance combined with trendline resistance on the hourly chart, making them significant points for reversals. 5777, the range midpoint and major balance area. A sustained hold above here could trigger a bullish momentum. 5799, upper quadrant pivot level and within the imbalance area created by the ISM and JOLTS data, indicating a critical battleground for buyers and sellers. 5821, upper range level with buy side liquidity. If this area is breached, we can see an uptick in buying pressure leading to a squeeze. And finally, 5830, all-time highs, a significant psychological level that traders will closely monitor for breakout potential. Now, the best strategy is to trade level to level, taking profits where appropriate and letting runners run, ensuring we manage our risk effectively. The September jobs report is out, and it was a big one. The U.S. economy added 254,000 jobs, blowing past the market's expectation of 148,000. This surprise upside showed that the labor market remained strong, even though many thought we'd be seeing some cooling. But here's the thing, revisions to previous reports have been consistently downward. In fact, 16 of the last 19 jobs reports have been revised down. So while today's numbers look great, don't be surprised if we see adjustments in the coming months. The unemployment rate stayed steady at 4.2%, which was in line with what most were expecting. No major surprises here, but still a signal of resilient job market. So that's this weekend's breakdown. The job market is stronger than expected, but watch out for revisions and what Fed might do next. Drop your thoughts in the comments and remember, let's trade the present so we can seize opportunities in the future. Alright, now let's get down to business, the technicals. That initial drop at the open trapped a lot of traders expecting a bounce off 5788 and 5777, but the market gave up the entire NFP move, causing some panic. However, if you waited for the hourly closes, there were clear signs that the bulls were defending a level, specifically 5763. 20-point hourly wicks were showing that buyers were stepping in. Adding to that, the internals like Volt and Breadth were trending up all day. Despite the dips, showing divergence between the broad market and ES and NQ futures in price action. Lastly, Apple was interesting during the pullback as it continued to defend its breakdown area at 225, with every hourly candle closing above that level. The expected move plotted last week came in clutch during last week's price action, testing it multiple times for areas of major support. Here are the expected ranges for next week based on options implied volatility. Monday, October 4th, upper range 5830, lower range 5761. Tuesday, October 5th, upper range 5842, lower range 5748. Wednesday, October 6th, upper range 5857, lower range 5733. Thursday, October 7th, upper range 5880, lower range 5733. Friday, October 8th, upper range 5884, lower range 5707. Seems like Friday is going to be a very slow day. Let's also consider the overall sentiment. We're at the edge of greed and extreme greed. Seasonality is still in play. Although it hasn't kicked in immediately, it's not something we should ignore. Markets often manipulate traders into a directional bias before making their real move, and we've seen this before. ranging for days or weeks before finally breaking out. To identify these breakouts, I focus on range and volume profiles. Markets move between areas of balance, and big moves typically happen out of consolidation. These consolidation phases are where large orders accumulate, and the longer the consolidation, the larger the potential breakout. I'd love to dig deeper into this topic in a future video. If you're interested, let me know in the comments. Now for the bullish scenario. For the bulls to keep the momentum going, the key level here they must hold is 5777. A successful hold here is crucial for continuing the upward trend. If 5777 fails, the next move is likely to target the range low, where the buyers will look to enter in again at discounts. The best case scenario for bulls is a successful test of 5777, which could lead to a bounce towards 5800. Consolidating above 5800 would start putting pressure on the weaker bears, potentially forcing them to cover their positions. I believe stronger bears are likely positioned close to 5828, near all-time highs. If we reach this level, we could see a bear squeeze, clearing the way for further bullish price action. If we do break above the range high, expect a slow but steady grind higher. However, it's important to keep an eye on any signs of failed breakouts, as this could lead to a quick reversal. If you're already in from 5777, this is a great spot to manage your runners. For those who missed the initial bounce, the next best opportunity may be to wait for a retest of range high for confirmation. Right now, we're in the premium of this weekly consolidation range. From a range trading perspective, this is where bulls technically start selling and bears begin shorting. A solid short entry would be around 5821 or 5815. There's liquidity sitting at 5821, where trapped bulls are likely to exit. Plus, 5815 aligns with the daily level, making it a strong area to watch. For the first downside target, look for 5793 and 5790, but the major target here, of course, is 5777, which is the range midpoint. Bulls will probably attempt to step in and reverse from this point. If 5777 breaks, bears can really start gaining momentum again. After that, we're heading into the discount area of the range. Key downside targets include 5763, 5755, and the range low at 5733 and 5724. A break below 5733 and 5724 will be significant, signaling a potential continuation to the downside. If you're already in shorts from 5777, first of all, congratulations. You should keep your runners open in case we see further selling pressure. If you missed the initial short, wait for the retest of 5724 and 5733 area to confirm another leg down. That wraps up for today's breakdown. We covered the major market moves and technical setup for next week. Thank you so much for tuning in. Your support means everything to me. If you found this analysis helpful, don't forget to like, subscribe, and let's keep learning and trading the present, the now, to seize opportunities in the future. Thanks again, and we'll see you in the next one.